Okay, so yung topic natin is about cost of capital or weighted average cost of capital. So anyway, when it comes to the discounted cash flow model, now we are using the cost of capital as the discount rate, no, to get the present value. So yung DCF model na tinatawag natin, no, yung discounted cash flow. So we are using the cost of capital to get the discount, or we are using that cost of capital as a discount rate, no, to get the present value of the cash inflows. So the DCF can be applied to valuation of stocks, or it can be applied to valuation of bonds. Or if you would like to get the value of the stocks or the bonds at year zero. And then we can also use this cost of capital not to discount the cash inflows, no, for capital budgeting decision. So the reason why cost of capital is very important now, because this will definitely affect your decision making. Huh? So anyway, cost of capital is also defined as the minimum rate of return that is necessary to maintain the market value of the firm or price of the firm's stock. But actually, even for the bonds, no, and even for capital budgeting, we're using the cost of capital to discount, no, the cash flow. So the reason why in the discounted cash flow or yung DCF method na tinatawag natin or model, we are using the cost of capital. So sometimes this cost of capital, ginagamit natin din siya as hurdle rate, no, okay, or discounted rate, or benchmark, or minimum required rate of return. Huh? So, minsan depende lang sa usage, but actually, the computation for the cost of capital would be the same. No? Whether we use that as a hurdle rate, or let's say we use that as a discounted rate, or we use them as a minimum required rate of return. So if you are investing, the cost of capital can be termed as minimum required rate of return. But if you want to get the present value, so we can use the cost of capital as the discounted rate. Kaya minsan nakakalito siya kasi the computations are basically the same, and then the terms being used are also sometimes different. But actually, they are just functioning the same, no? So depending na lang sa situation, kung sa bonds, sa stocks, if you're investing or you are borrowing. Okay, the next we have applications, no? So for the applications one, as mentioned a while ago, it is used in making capital budgeting decisions. In making capital budgeting decisions. Why? Because if you have cash flows, also the cash flows, you will get the present value by using the cost of capital or the required rate of return, and then summing up all the present value, no, of all the cash inflows, and then you compare that to the investment amount. So once compared, you will now make a decision. Now, if the cash inflows are more than the cash outflows, then you accept the project, no, under the capital budgeting. So I repeat, we use the cost of capital to discount, no, the present value of all the cash inflows. And once you obtained, no, or you have already the sum of all the present value of cash inflows, it will be compared to the amount of the investments. So dapat mas mataas yung present value ng cash inflows, no, against the cash outflows for you to accept the project. And then it is also used in establishing the optimal capital structure. So paano natin ginagawa yon? Isulat natin dito sa word value, no? Okay, so Excel na lang para makita mo. So, natatandaan niyo ba kung ano yung capital structure class? Do you still remember your capital structure? Sofia Icasiano? Do you still remember your capital structure?
Medyo lang po, sir.
Ano ba yung capital structure natin, Sofia? Kapag sinabi natin capital structure,
Yun po yung, sir, diba? Yun po yung debt and equity po.
Okay, very good, no? So yan yung debt at saka yung equity. So based on what we learned, no, in capital structure theory, no, the price of the stock would be dependent on the capital structure of the company, no? So depending on 40% debt or 60% equity, or maybe 50% debt and then 50% equity, or pwede rin naman maging 60% debt or 40% equity, no? So using the cost of capital, now it will change your capital structure, no? So the combination of which, ito mga to, we can obtain the WACC, the weighted average cost of capital, no? So the reason why, pagdating nito, it helps in establishing the optimal capital structure. Diba? Kasi yan, cost of capital affects, no, the capital structure of the company. Kung mataas ang cost of capital mo, mataas yung WACC mo, syempre. At kung mataas yung WACC mo, chances are, yung mga projects na tatanggapin mo, mas mahirap makalusot sa'yo kasi mataas yung WACC mo. So this affects definitely your decision making, no? So the reason why the cost of capital is very important. So we're trying to look at the optimal capital structure. So ano ibig sabihin nun? We're trying to look at the balance, no? Or the mixture of debt and equity that will reduce our weighted average cost of capital. Because in that way, we can maximize the price of that stock of the company. That is if we are to apply that to the valuation of the stock. And then cost of capital also is very useful when it comes to making decisions such as leasing, bond refunding, and working capital management. Okay, so ito, huwag na lang natin pansinin yan, no? Kasi ito yung mga ginagamit natin in costing, no? Or getting the cost of capital for each, no, financing. But later on, I will explain this one by one. Nandito naman din siya. Okay, so example, this one. We have the cost of debt, no? So for the cost of debt, so meaning if you are going to finance a particular project, now because you would like to maybe expand your company, no, increase the production line of the firm, you would like to buy additional machine or equipment for the company, because you believe that it will increase the profitability of the firm. So you are going to finance them by using debt. Or in particular, let's say you are going to issue bonds. So if you use the bonds, for example, there is a formula for the cost of debt. So the formula will be, you have the I, no, plus the par value of the bond minus the value of the bond or issue price of the bond, then divided by N. And then the denominator is, you have the par value of the bond or the face value of the bond times 0.40 plus the value of the bond or issue price of the bond times 0.60. So yan yung magiging cost of debt natin before tax. Because because when it comes to the cost of tax, we need to sorry for that. Low battery ako eh. Sorry ha. Sandali. Anyway, I will use instead yung ano na lang. So anyway, mamaya na lang, baka mamaya ano pa siya. So anyway, for the, ito yung formula natin for computing for the cost of debt before tax. So what is important is to get the cost of debt after tax. Okay? So we need the cost of debt after tax. So to compute now for the cost of debt after tax, we have this formula. No, we have now the RD times the 1 minus T. So that is the cost of debt after tax. Okay, so where T is the... Sorry yung speaker ko nag-low bat. So anyway, yung T rito sa formula na to is the tax. So mag-example tayo bali na yun. No? Example tayo. So assume that chartered company issues a 1,000 8% 20-year bond whose net proceeds are 940. The tax rate is 40%. Then the before tax cost of debt is, so we have the, sorry for this, iba yung nakasulat. Palitan natin ng konti. This one is RB. So, parang na-edit. Okay, so yan. So we have I is equivalent to M minus V divided by N, no? Then we have the M times 0.40 plus the V times 0.60. So once we compute now for the coupon payment, we have 8% times 1,000. So that is 80. And then we have the the face value of the bond, which is 1,000. And this one is the issue price of the bond. So you have the life of the yield for 20 years. So 21. And then we apply itong part na to, no? So that's why it's 1,000 times 0.40 at saka 940 times 0.60. So you will get 83 over 964. So you will get the cost of debt before tax to be 8.6%. Now to get the after tax cost of debt, we have the RD times the 1 minus T. So we have now the 8.6% times 1 minus 0.4. So you get 5.16%. So you already actually studied this in your, I do not know if it is financial management or financial market. No? So anyway, the cost of debt after tax is 5.16. So once you compute for the WACC, what we are going to use is of course the cost of debt after tax, not the cost of debt before tax. Huh? So take note of that. We are going to use, in computing for the WACC, the cost of debt after tax. Okay, now let's go to the cost of preferred stock. So the cost of preferred stock, IP, is found by dividing the annual preferred stock dividend, DP, by the net proceeds from the sale of the preferred stock, so P, as follows. So yung P dito is actually the price of your stock, no? The price of your stock, so that is PO. So if you are to sell preferred stock, meron tayong dito tinatawag na F. But if you're not going to sell additional, di wala siyang F, no? Pero pagka nagbenta ka ng preferred stock, there should be an F there, no? So the F there stands for the flotation cost. Okay? So example tayo rito. Okay. So we have credit company has preferred stock that pays 13% dividend per share and sells for 100 pesos per share in the market. So the flotation or underwriting cost is 3% or 3 pesos per share. Then the cost of preferred stock is, no? So this is the formula. So we have the D1. The D1 is the, what do you call this? The dividend, no? Ito yung dividend natin, which is 13 pesos. And then the price of the stock, preferred stock, is 100. And then we have 3 pesos as the flotation cost. Diba? Okay, so 13 over 100 minus 3. So the cost of preferred stock is 13.4%. So meaning we are going to issue preferred stock. So if we would like to finance a particular project again, and then this preferred stock, no, this preferred stock is the one used for financing them. Halimbawa, gusto mo magtayo ng bagong building ulit, yan, no? O kaya, bibili ng machine. Nakapag-issue na tayo halimbawa ng bonds. And if you are going to issue additional bonds, that will increase the cost of the capital, no, for the debt. So instead, we are going to issue preferred stock. So yan ang computation for the cost of the preferred stock. So do you have any question or clarification? Let me just use first the headset na lang. Kasi ganun yung aking speaker, no? So do you have any question or clarification, class?
Sir, we can't hear you po.
Hello?
Okay na po, sir. We can hear you now po.
Hello? Do you hear him? Kayong hindi ko naririnig talaga.
Yes po, sir. Narinig.
Naririnig nyo na ako?
Yes po, sir.
Sige, mabuti, no? Okay, so did you understand the lesson, class, by the way? Kanina ba naririnig nyo ako nung dinidiscuss ko itong mga to?
Yes po, sir. Before po kayo mag-switch sa headphones.
Okay. So, kasi yung speaker ko, nag-lobat, hindi ko kayo marinig kung magsasalita kayo. Kaya I shifted to or transfer to sa headphone na lang, no? Okay, so naintindihan ba, class?
Yes po, sir.
Okay, so let's go to the next. Basta't may question kayo, okay, may magtanong, ha? So next we have the cost of common equity. So this one, if you're going to use your retained earnings, so meaning there's no additional capital that you will issue. So it simply means that you will be using your retained earnings. Ha? So kung gagamit kayo ng retained earnings, so ibig sabihin yan, walang flotation cost. Diba? So anyway, in using the cost of common equity or the internal financing, the cost of common stock RS is generally viewed as the rate of return investors require on the firm's common stock. So there are three ways to compute for the cost of common equity. So one is the Gordon's growth model. The other one is the capital asset pricing model. And the last one is the bond plus approach. Okay, for the Gordon's growth model, the formula will be D1 all over PO plus G. No? So the D1 stands for the dividend to be received after 1 year. Then the piece of O is the price of the stock, no, at the time you bought the stock. And the G is the growth rate, no. So the G should be assumed to be constant over time. So anyway, what is the formula for G? Now the formula for the G is so dapat alam nyo rin to. Now for the formula for the G is ano ba yan? ROE, no, times 1 minus BPO. Okay, so the formula is the G is equivalent to ROE times 1 minus DPO. So ROE, I'm sure you know this, no? Return on equity. And then we have 1 minus DPO. So the DPO is your dividend payout ratio, no? So that is your dividend payout ratio. So this one can also be used, no? Meron din siyang other formula for that. yung ROE times the RR, so the retention ratio. Kasi basically, itong 1 minus DPO, that is the retention ratio pagka kinuha mo yung difference. So this formula can be written also as ROE times RR. Okay, maliwanag ba yung class? Maliwanag ba? Okay, so sandali, nag-email siya, no, sir, kasama. Mali pala. Sandali, class, ha? Class, sandali lang. Kasi nag-ano sila para doon sa TOS. Sorry, ha? Sandali. Ano bang diniscuss namin? Oo nga pala, no? Ano ba yung diniscuss ko? Bakit gano'n? Sandali lang, class, ha? Titignan ko yung coverage ng fault natin. ST collision. Dito yun. Oo nga, mali. Okay. So anyway, by the way, class, yung coverage ng exam natin would be the topic 1 and WHCC. Ha? Sabihan ko muna itong ating ano. So anyway, again, class, yung coverage ng exam natin, buti may nagtanong, no? So the coverage of the exam is the topic 1 and then WHCC, no? So yun, no? So anyway, on this part, class, may question kayo or clarification? Question or clarification, class? Wala?
Wala po, sir.
Okay, naintindihan na? Okay, next. Now we have the capital asset pricing model, no? So this is the formula. So the formula is the risk-free rate plus the beta times the RM minus RF. Kaya lang, let me explain this part, class, no? Kasi dyan madalas nagkakalituhan. So let me write that again sa PowerPoint, ha? So meron tayong risk-free plus the beta times the RM minus RF. Okay, so that is the formula for the CAPM. So yung RF stands for the risk-free rate. Then the B is the beta. So when we talk of beta, we're talking of the volatility of the company stock against the market, no? So kung ang beta halimbawa ay 1, so meaning it is equally risky as the average market, average return in the market. But if the beta is more than 1, so it simply means that the company is more risky than the market. But if the beta is less than 1, meaning it is less risky than the market. So then we have the RM minus the RF. No? Yung RM minus RF na to. So the RM minus RF is the market premium. But once multiplied by the RM minus RF times B, That is what you call the risk premium. Ngayon, yung beta kasi, normally, once we compute for the beta, and let's say, yung halimbawa, we are using the market, no, the average market return. So yung average market return kasi yan, dahil market yan, so yung beta niyan is 1. Di ba? So pagka multiply natin yan sa RM minus RF, kaya multiply mo sa 1 yan, the risk premium and the market premium would be the same. Tama ba? Because the beta is 1. But this is, we're talking of the market. Kaya minsan, pagkatanong halimbawa, kasi dito nalilito yung mga estudyante, paano niya malalaman daw kung risk premium yan na kailangan i-multiply pa sa beta ulit. So, kung ang binigay na risk premium class, no? Kung ang binigay na risk premium are coming from the market. So, let's say this one is the corporate. That one is the corporate, no? So, kung ang binigay na risk premium ay coming from the market. So, ibig sabihin nun, whether it is market premium or risk premium, pareho lang yan. Pareho lang amount because the beta is 1. So, if the market, no, binigay niya yung risk premium at binigay naman yung beta ng corporate, so still you multiply the risk premium by the beta of the corporation. Kasi pagka sinabi ditong risk premium, kaya hindi mo multiply sa 1 yon, yung market premium mo pareho pa rin. Diba? So the reason why, if the market premium is given, tapos multiplied by 1, so yun na yung risk premium ng market. Pagdating sa corporate, you still multiply that by B. Yan, let's say binigay lang ang market premium. So kung market premium yun, hindi syempre multiply pa rin sa beta yan ng corporate. Ha? Kasi doon minsan doon madalas nagkakalituan ang mga estudyante. No, litong-lito sila dyan sa part na yan. Kailan daw minumultiply yung risk premium doon sa beta ng corporate? Minumultiply lang ang risk premium doon sa corporate kung ang risk premium na binigay ay galing doon sa market. Kasi yun yung average market natin. Ang average market natin, ang beta is 1. Diba? Kaya yung risk premium at saka yung market premium would be the same under the market. But the risk premium of the corporate will be different from the risk premium of the market. Kasi magkaiba ang kanilang beta. Magkakapareho lang sila kung ang beta rin ni corporate ay 1. Ha? So, kaya huwag kayong malilito ron. So basically, ito yung ating formula, no, for the CAPM, no? Okay, example natin dito. So assuming that RF is 7% and beta is 1.5 and RM is 13%. Then to compute for the capital asset pricing model, no, to compute for the cost. So we have the 7%. So ito 'yon. And saka ito. And then we have the 1.5. And then the 13% value rito, no, for the market return. So so meaning the cost of capital now is 16%, no, 16%. Okay, so we have the bond plus approach now. Now for the bond plus approach, the formula is long-term bond rate plus the risk premium. So dito kinukuha natin yung after tax. So, kung hindi binigit sa exam, yung tax, so ibig sabihin, after tax yung long-term bond rate na binigay ron. But if the tax rate is given, then you have to get the after tax. Now, the risk premium also, if not given, so there's no way for us to compute for, let's say, the risk premium, then you have to use the 4 as the standard rate. No? So yan yung formula natin for the long-term bond. Okay, so example tayo. So doon sa example natin kanina, hindi ko napalitan to. Sandali, palitan natin ha. Kasi yung kanina ay 5.16. So dapat ito ay 5.16 na rin, no? So this one should be 5.16. This one is also 16. in-edit ko na yan, hindi pa lumusot pa siya, no? So ito yung kinuha natin kanina na cost of debt after tax. Di ba? Yan yung cost of debt natin kanina after tax. Then we add the risk premium of 4%. So again, if you cannot obtain the risk premium, you can use the 4% as standard. Huh? So we add, so using the bond plus approach, the cost of equity is 9.16%. Okay, may question dito or clarification, class? Huh? Question, class? Question, clarification? Or can I see raise of hand kung naintindihan? Okay, very good. No? Naintindihan naman pala ninyo. Na-discuss na rin ba ninyo ito sa intact ninyo? Intact ba yung subject nyo yun? Tama ba ako, Sherlyn?
Financial markets po, sir.
Hindi, ibig sabihin na-cover nyo, kino-cover nyo ba ngayon ito sulit sa compra nyo? Di ba may compre kayo?
Yes po, sir. Pero hindi pa po siya na-tackle for this semester ulit.
So financial market nyo na-cover ito.
Yes po, sir.
Pero yung iba sa inyo siguro, naging estudyante ko sa financial market last sem, no? May mga naging student ba ako sa inyo sa financial market last sem? Mag-raise nga kayo ng hand kung meron sa inyo. Ayan, si Jacel, no? Isa lang. Si Erica, no? Sofia. Okay. So yung iba, hindi ko na-handle. No? Hindi ko na-handle yung iba. Okay, so hindi bale. Okay lang yan, no? So I hope that you will learn, no? Okay, so next tayo. Continue. Let's say we have the cost of new common stock. So this time, they will issue additional stock. No? They will issue additional stock. Parang katulad dun sa preferred stock natin kanina, no, meron tayong issuance of preferred stock. So itong formula na to, actually, pareho din siya ng D1 all over PO, no? Times yung ang ba ginamit ko kanina? Minus F, wala minus F, ganyan, di ba? So wala itong part na to. Yan. So actually, pareho lang sila ng formula class. Ha? So ito, tapos ito plus G, magkakaroon na siya ng plus G. Pero sinasabi ko ito, pareho lang siya. Okay? So this one is being used if the F given to you is in terms of percentage. Pero pagka ganito naman ang formula, yung F is in absolute amount. Okay? Okay lang, dito sa cost of new common stock, we have the G at the end. Okay, so yung G na yan, again, that is the truth. So, yan siya, no? Okay, so apply natin siya ngayon. So assume the same data in previous example, except that the firm is trying to sell new issues stock of A, and its flotation cost is 10%. Saan ba natin kinuha to? Tignan ko lang, ha? F4%. Ito. Wala pala akong example na maibigay rito, ha? Nabura ko. So anyway, let us assume na yung dividend, D1 is 4, and the price of the stock is 40. Tapos nagbigay siya ng flotation cost na 10%. Diba? So yan, 10%. So that's why we have the 1 minus 0.10. So we have now 4 all over 40 times 0.90, then plus 6%. So ito na siya bali ngayon lalabas, no? 4 over 36 plus 6%. So you would get 17.11% as the cost of new common stock. So if you will notice, class, no? Pagka may flotation cost, mas mataas ang cost of common stock. Na mas mataas ang common stock. Yung cost of capital natin. No? Kasi yung denominator lumiliit because of the flotation cost. Ha? So this is in the situation na meron tayong flotation cost, no? Siyempre, pagka yung common stock na ini-issue, naturally, you have the flotation cost. Unless if you're going to use the retained earnings, then there's no flotation cost for that. Kasi internal financing siya. Okay, so another way to compute is we have the cash inflow all over the initial cost plus the flotation cost. Okay, so we're just adding the flotation cost. Pero dito naman, mas madalas ginagamit natin itong mga formula na to. Ha? Now, what about this? Now, retained earnings breakpoint. Now, for the retained earnings breakpoint, ang sinasabi lang yan, that is the amount of capital raised beyond which new common stock will be issued. So we have the addition to RE for the year, then all over the equity fraction. So, meaning, if the retained earnings breakpoint is 100,000, although 100K at 100,000 siya, no? So, ibig sabihin, in excess of the 100,000, we have to issue additional stocks, no? Bali yun ang sinasabi niya. Or maybe not stocks, but maybe you can issue additional bonds for that. Kaya yun ang tinatawag na retained earnings breakpoint. Okay? So dito, malalaman natin yan pagka ginamit natin itong formula na ito. So in excess of that amount, the computed amount, would be the amount to be issued. No? It's either you issue stocks o kaya bonds. Okay, clear ba yan, class? Question or clarification? Question? Wala? Sige. So I assume na naintindihan niyo yung class, ha? Okay, let's go now to the weighted average cost of capital. So the weighted average cost of capital now, yung formula natin, no, is the summation of all the capital structures supplied by each type, then times the cost of capital for each type of capital. Dalawa pa, no? Each type of capital. So kaya ibig sabihin nito, we have the weight for the debt, times the cost of debt after tax. Then we have the weight for the preferred stock times the cost of capital for the preferred stock. And then we have the cost, no, of common stock. Weight for the common stock times the cost of stock or cost of common stock. And then this one is the weight, no, for the external financing times the additional common stock. So yung cost of stock, cost of common stock, new, lumalabas yan. So we're getting the weight for each, no? So that is in the assumption, no, that is in the assumption that you will use, no, the 4. Pero pwede naman kasing gamitin dalawa lang o kaya tatlo lang, no? But just in case you will be using the entire, no? Let's say yung bonds, yung preferred stock, yung common stock, and retained earnings, then that is the formula. But again, it may be only a combination of 2. And even if it is a combination of 2, you already call that as WACC, weighted average cost of capital. So to compute for the weighted average cost of capital, there are 2 ways, no? One is the book value weights, the other one is the market value weights. So when we say book value weights, the figures are coming from your balance sheet because it was already recorded, no? It was already recorded in your books. So yun ang gagamitin natin. So meaning, in your balance sheet, you can see the mortgage bonds to be 20 million, the preferred stock to be 5 million, the common stock to be 20 million, and then we have the retained earnings to be 5 million. So the total now is 50 million. So this time, we will get the weight, no, for each of the items, no? So we have that 20 million divided by 50 million. So yung makukuha natin ay 40%. 5 million by 50, 10%. Then 20 million by 50, 40. Then 5 by 50, 10. So this is now your weight. Yan na yung mga weights natin bale, no? For the debt, for the preferred stock, for the common stock, and then the retained earnings. And these are the computed. Ito yung mga sorry, piniyok pa, no? So these are the computed cost of capital, no, for each. So may umupa kasi ako no? So for the cost of debt, we have 5.16%. For the preferred stock, we have 13.4%. Then for the common stock, ang ginamit natin yung CAP-M yata, no? Yung CAP-M. Check natin para sigurado, ha? Ito, CAP-M, I know. Ang ginamit ko pala yung issuance of new common stock, no? Issuance of new common stock. Pero yung isa, itong retained earnings, saan ko ginawa yung retained earnings na yan? Parang hindi ko yata napakita yung computation ng retained earnings na to. Check natin kung saan siya, kung nandoon. Ito pala. Ang ginamit ko yung capital asset pricing model. Kasi pwedeng capital asset pricing model ang gamitin, no? Pwedeng yung bond plus approach, pwede yung constant growth model. Pero in this case, I use the capital asset pricing model. So 16%, no? Kaya punta na tayo ron. Kaya nandito, 16%, no? So all we have to do now is to multiply them. So 40% times 5.16, you will get 2.06. 10% times 13.4, you get 1.34%. Then 40% times 17.11, you get 684%. Then we have the 10% times 16%, you get 1.6. So once you add all of these, you have the 11.84%. So yan na yung tinatawag natin ngayon na weighted average cost of capital. And then that figure will be used to get the present value, no, of your bonds, o kaya ng yung stock, no? So yan yung gagamitin na natin to discount, no, your bonds, o kaya yung cash flow ninyo if you're using the capital budgeting, o kaya for the valuation of stocks. Maliwanag ba yung class? Is it clear? Clear ba yung class?
Yes po, sir.
What about the rest? Okay. So thank you very much. Basta't hindi nyo naintindihan, tanong ka agad, ha? I don't mind you asking me questions about this. And if you have some clarifications also, let's say may nabasa na kayo at hindi nyo naintindihan, you can also clarify that to me if you want, ha? Okay, so the other one is the market value rate. So kanina, book value. So ngayon, meron tayong market value rates, no? So when we see market value rates, this is the current price, current value of the common stock, preferred stock, and the bonds of the company. So definitely, kung meron tayong book value, para mapunta sa market value yan, then we have to compute, no, for the market value. We have to get the units for the bond, and we get to have to get the shares of the stocks, no, for the preferred and common. So, halimbawa ito, no? Ang sabi rito, ang current price ng mortgage bond ay 1,100 per unit. Tapos yung preferred stock daw ay 90 at yung common stock ay 80. Now, for us to compute the market value, so we have to get the units. Units for the bonds, the number of shares for the preferred, and the number of shares for the common stock. And then we will multiply them. Yan, multiply natin yan. Then for the preferred, multiply. And then this one also multiply. For you to get the market value. Okay, so ito na siya. No? So we multiply now. Yan. So multiply. So we get 22 million for the debt. Then we have 4 million 5 for the preferred and 40 million for the common stock. So, ibig sabihin, yan ay market value niya. So again, after getting that, we have to get again the weight naman. No? We have to get the weights again. Kasi nagbago siyempre yung total niyan. So we have to get the weights for each. Huh? So for the debt now, it's 22 million divided by 71 million 5. So yan na siya. You get 30.77, 4 million 5 by 71.5, 6.29. 40 million by 71.5, 55.94. Then 5 million by 71.5, 6.29. And then again, we've just multiplied them by the cost of capital, no, for each. And we obtain now this. And then the total now is 13.12%, which is the weighted average cost of capital. Now, may question ngayon ako, no? May question ngayon ako. Ano bang preferred? Yung bang book value or market value? Do you have any questions? Ano ba mas maganda? Book value or market value? Tingin nyo. Magtatanong ako Tingnan natin kung nare-recall ninyo yung mga naturo ko last time, especially for my students. Okay, yung iba pwede ko yung tanungin. So let's see si Oiling Abigail lang. Oiling. Oiling, are you a Filipino or a Chinese? Hello, Oiling Abigail? Are you there, Oiling?
Yes po, sir.
You can understand Filipino?
Apo.
Filipino ka naman.
Apo.
Kasi, okay. Kasi yung pangalan mo, Huiling. Parang Chinese, no? Okay, pero anyway, tingin mo, ano bang nickname mo?
Avi na lang po.
Avi na lang, Avi. Pero how do you pronounce your name? Huiling? Huiling?
Wailing po.
Wailing, Wailing. Alam mo, hirap ako sa pangalan ng mga Chinese talaga, no? Alam mo, i-break ko lang ng konti, Alam mo, meron akong estudyante sa graduate school in the doctorate program. All of them are Chinese. Chinese from mainland China. Ang hirap i-pronounce ng name nila. At saka magkakapareho yung tunog, no? So anyway, Avi, ano ba mas maganda, yung market value weights or the book value weights?
Sorry, sir?
Ano mas okay gamitin? Or preferred gamitin? Market value weights or the book value weights?
Market value po.
Market value, bakit? Why do you think market value is better? Kasi yan yung current value niya. Ganun ba yan?
Apo.
Okay, so tama naman yun pagka yun ang sagot mo, no? But actually, based on the books that I read, no, regarding this, walang preferred. So you can use either the market value or the book value weight. So the advantage of using the book value weight is because it is based on your balance sheet. But the disadvantage of which is that it doesn't reflect the market value. Yun naman yun, no? Now, with regard to the market value weights, the advantage of which is that, of course, it is at its present value. I mean, current value or current state. But the disadvantage of which is that it does not reflect naman yung balance sheet figures mo. No? So, kaya ganon. Kaya minsan, sinasabi ng mga authors na nabasa ko, there's no actually preferred method to be used, whether it's market value weight or the book value weight. But maybe, no, what we can do, no, sa akin ito, this is my opinion, kasi di ba, we are looking for the optimal capital structure. And for you to get the optimal capital structure, you have to get the lowest WACC so that you can maximize the price of the stock. Diba yan yung napag-aralan natin sa capital structure, di ba? Dati That is, we have to look for the optimal capital structure, no? The combination of stocks and liability. And how to do that? That is by looking at the lowest WACC. And the WACC at its lowest will give us the maximum price of the stock, which is the objective naman in financial management. So between the two, na dito sa example natin, mas mababa si book value rate, di ba? Kasi it's only 11.84%. And then the other one is 13.12. So kung akong tatanungin, gagamitin ko yung book value rate. Why? Because the book value rate, no, the weighted average cost of capital is lower compared to the market value rate. And since wala naman sinasabing preferred, gagamitin ko yung book value rate. So the advantage of which, when it comes to capital budgeting, I can accept more projects. Diba? I can accept more projects. Now, in terms of stocks naman, it can help to maximize the price of the stocks of the company. Tama ba? O kaya, yun ang explanation ko naman pagdating sa market value rates at saka book value rates as to its preference. Okay, so what are the factors that affect, no, WACC? So one, of course, is the interest rates in the economy. No? Kasi pagka interest rates tumaas, pagdating sa bonds, bumababa ang value. Pagka bumaba ang interest rates naman yan, tumataas ang value ng stock. Now, what is the effect of interest rates when it comes to stocks? Pagdating sa interest rates naman, with regard to the stocks, when the interest rates goes up, no, when the interest rate goes up, the price of the stock chances are babaksak. Now, but if the interest rate goes down, the price of the stock chances are will also increase. Bakit? Kasi yung mga investors natin, pagka mataas yung interest rate, natural, pupunta ako doon sa fixed income na kagad. Mataas yung interest rate, so doon na lang ako. At ba ako magtitake ng chance sa stocks? But if the interest rate is low, mababa yung kita, so I'll take my chance to go to that stock market. Kasi mataas ang chance na kumita ako na malaki. No? Because people or investors will go in to the market, to the stock market, to buy stocks, no? To go after the return, higher return, because of the interest rate is low. Okay? And then, of course, yung general level of stock prices, o yan, nabanggit ko na rin kanina. And then, of course, the tax rates, no? And then we have the factors that the firm directly control. So we have the changing capital structure. Siyempre, they can use different combinations, no? Kaya, pwedeng gawin ng company yan. Ha? And then changing its dividend payout ratio. So saan nang gagaling yun? So ginamit natin yung formula kanina. Saan ko ba nawawala na yung aking Excel? Anyway, yung dividend payout, di ba may formula tayo na D1 all over PO plus G. Di ba? Dun sa G, may formula tayo na ROE is equivalent to G is equivalent to ROE times 1 minus DPO. O nandun yung dividend payout. So definitely, it will affect G, and then the G will affect now the cost of capital. Diba? And then by altering its capital budgeting decision rules to accept projects. O yan, nabanggit ko na rin yan, no? So the lower the cost of capital, the more projects that you can have, no? So pwede kang magkaroon ng risk adjustment. Okay, yan yung bagay. O, wala na, tapos na. So do you have any question or clarification? Stop recording ako, ha?